Australia's annual rate of inflation has risen
1% for the quarter, 3.8% year on year.
So that is pretty much bang on where the forecast expected it to be.
It's almost as if there was a collective sigh of relief throughout Australia after the release of the hotly anticipated June quarter data. Inflation accelerated over the past 12 months, up from 3.6% at the start of the year. Rents rose more than 7% and power prices are up 6%. Both would have been higher had it not been for government subsidies or rebates. The cost of insurance surged 14%. Women's clothes rose more than 4%. And while most food price rises have eased, fruit costs 4.7% more than a year ago.
We are seeing underlying inflation in our economy moderate. We would like it to moderate further and faster, but this is the 6th consecutive quarter that underlying inflation has moderated.
And it's that underlying inflation rate the RBA watches because it takes out more volatile items of the data.
It peaked at, frankly scary levels in late 2022, early 23, so we did need to see that moderation. It's not all the way back to the target band, but if you're a central bank, you at least know that you're moving in the right momentum.
ANZ's economics team thinks we could be through the worst of the pain.
We're not expecting a sharp deterioration in the Australian economy leading to recession. We do think that we may be past the toughest point already.
But under ongoing price pressure, consumers are anxious.
Groceries, food, just basic stuff is really getting quite difficult to pay for.
I feel it, I see it every time I go to the shops.
Just can't buy as much as you could, like $100 trolley before, it's like $500. It's crazy.
As prices for consumers continue to rise, companies that can offer a discounted alternative are becoming increasingly popular. This warehouse sells almost 500,000 items every week as shoppers hunt for a bargain.
There's never been a time where Australians are more focused on value.
Roy Morgan research shows Amazon grew its customer base by 1.1 million last financial year to 7.9 million people. The retailer says customers are subscribing to buy the same item at regular intervals to receive a discount.
We're up 40% year on year on subscriptions. Most customers have 2 or more. And, that's on things like toilet paper, nappies, beverages.
Despite end of financial year sales giving retailers a boost, customers are buying less, with volumes down.
Today we also got data on retail sales, and adjusted for inflation, they've fallen in 6 out of the last 7 quarters. So households are still pulling back.
While the latest reading didn't surprise, inflation remains uncomfortably high. But some of the factors driving it can't be fixed through interest rate hikes. So the consensus is the RBA stays on hold when it meets next week.
We should be able to dodge another rate hike, but by the same token, that means the path to the first cut is potentially a bit longer than we're seeing in some other economies.
It will be a while before they will be sure that inflation is coming back down to target sustainably, and therefore they can start cutting. So we don't expect the RBA to start cutting the cash rate until February next year.
So rates look set to stay higher for even longer.